Hey everyone, welcome back to Corporate Decoder, the place where we break down corporate filings, and today we are diving into electroCore Incorporated. And let me tell you, this report is quite the read like a puzzle where some pieces are missing and others seem to be paid for with IOUS. This report is about a private placement of stock by electroCore Incorporated, a company focused on medical technology. Basically, they needed cash, or rather they needed to settle some debts, and they did it by printing more shares. Now, electroCore Incorporated is a company that makes devices for treating conditions like stroke and respiratory issues. They are traded on the Nasdaq Capital Market under the ticker symbol ECOR. The headline here, and it is a big one, is about a private placement that happened on the 30th of September 2025. electroCore entered into what are called securities purchase agreements with some institutional and accredited investors. Think of these as special deals with big money players. They sold 360,737 shares of their common stock. Here is where it gets interesting. These shares weren't sold for cash. Nope, electroCore issued these shares to settle outstanding legal fees. So essentially they paid their lawyers not with money but with company stock. This is often a sign that cash might be tight. They didn't get any new money into the company from this deal. The whole deal wrapped up very shortly after, on the 2nd of October. Now these shares are what they call unregistered. This means they were issued using special rules that let companies sell stock without going through the full registration process with the Securities and Exchange Commission. They are relying on exemptions like Section 4A2 and Regulation D, which are typically for private deals, not open to everyone. This usually means it is a limited offering to sophisticated investors who can handle the risks. But there is a catch. electroCore promised to file a registration statement with the SEC. This is a commitment to register these shares so that the investors who bought them can eventually sell them freely in the public market. They have to get this done within 90 days. This is a really important detail because failing to do so could create big problems for both the company and the investors. The agreements themselves contain standard stuff like promises from the company and conditions for the deal to close. The company also agreed to protect the buyers from certain risks, including issues under the Securities Act and if the company messes up its promises. So what does this all mean for electroCore? Well, on the surface, it looks like they managed to resolve some debt without dipping into their cash reserves. That is a useful trick. However, issuing stock, especially in a private placement to settle debts, can dilute the value of existing shares. That means each share represents a smaller piece of the company than it did before. It also suggests that raising money through traditional means like selling new shares to the public or taking out loans might have been more difficult or more expensive. The fact that they are paying legal fees this way is a flashing yellow light that they might be under financial stress. The commitment to register the shares is crucial. If they can get that done, it adds another layer of uncertainty and potential legal headaches. Investors will be watching closely to see if they meet that 90-day deadline. Now, looking at the broader picture for electroCore Incorporated, this filing is all about managing their financial obligations. It is not a sign of explosive growth or new product launches, but rather a behind-the-scenes maneuver to keep the lights on and legal disputes at bay. The company's strategy here seems to be focused on immediate financial relief rather than long-term capital infusion from this particular transaction. The strength lies in their ability to find investors willing to take on their stock, even at a discount via debt settlement. The weakness is undoubtedly the potential dilution and the underlying signal about their cash flow. A key opportunity for them will be successfully navigating this registration process and proving to the market their underlying business is sound enough to warrant continued investment. The biggest risk is a failure to register the shares, which could lead to regulatory action and investor dissatisfaction. Alright, that is our breakdown of electroCore Incorporated's latest filing. What is your take on these numbers and what they signal for the company? Future. Do you think this private placement was a smart move or a sign of trouble? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description below. Thanks for watching. See you next time.